Let's talk more about these movements now with Gary Booysen from Rand Swiss. As always, Gary, pleasure to have you talk to us this evening. Let's talk about the overall performance of the markets. The JSE almost 1% in the red. I mentioned earlier that financials did weigh heavy on the local bourse, but what were some of the other catalysts?
That's 100% right. So the financials are down just over 1%. The all-share index down at 67,211. So that's also just over 1% lower, but really driven by resources. So we saw the resource index, which is generally a more volatile index anyway, down 2.3%. Industrials managed to hold some ground, only down 0.2%. So they're really dragged down by the resources, and I think this is just coming on the back of a stronger dollar, and also that translating into slightly weaker commodity prices. You're getting the sense that we've got a little bit of risk-off trade playing into the market ahead of the big FOMC meeting that we're getting out. We'll have the results of at least tomorrow evening. On the economic front, we had a couple of data points out of the US. We had US retail sales out today. Nothing really to write home about. They came in down 1.3%. The market was expecting 0.8% in the US, a little bit weaker, but probably not enough to derail the rally ahead of something as big as the FOMC and learning what the monetary authorities in the US are going to do tomorrow.
Right. You've mentioned that the dollar has been quite strong. Is that what is influencing the rand's losing streak, or are there some other reasons that we're seeing the rand falling from its record highs that we've been seeing over the last few days?
So the rand has pulled back off that. If you're looking to the dollar around 13.40 to the dollar, it's moved all the way back out to about 13.80. So still fairly strong, if all things considered. We've had an incredible run in the rand over the last, say, 6 months or so. But yeah, certainly this is dollar strength. You can see it in the gold price as well. Gold ticking up to around 8, or at least ticking down to around 1860 per ounce, and that's just taking the shine off everything that you're comparing to the dollar at the moment. The dollar been on a losing streak for a long time, so a little bit of strength, a little bit of nerves. It's obviously a safe haven currency that people are moving into, ahead of a bigger event like tomorrow. So, our currency, unfortunately, is always going to be very subject to portfolio flows, as speculators reposition, as interest rate expectations change, people buy and sell South African bonds. They move money cross border, and it really pushes around our currency. That's why the rand is one of the most volatile currencies on the planet.
Let's move on to some company news now. Impact releasing a trading update. So they're saying that trading has been strong, and this is the paper and packaging manufacturer, and that underlying profit exceeding pre-pandemic profits in both the plastics and the paper businesses.
Yeah, so both the paper and packaging parts of the business very, very strong. So Impact actually ended up 1.28, so bucked the trend in the market. Everyone obviously enjoying that. It was a voluntary trading statement, so it wasn't obligated by the exchange, and it just gave us an insight into what's been happening over the last 5 months for Impact. And as you said, very, very strong results in paper and packaging. We had group revenue up around 16% to 4.8 billion. Operating profit also, or at least headline numbers at least more than doubled. So that profit coming in at 240 million. And what they're really seeing, I think what they're attributing the success to is just the inflation that we're still seeing coming into the system. So they got big increases in container board prices. They also saw big increases in the price that they could get for plastic packaging. One of the things that held back the results, though, was obviously the input costs. So some of their polymer prices also coming in higher, just taking the shine off, maybe not making them exceptional. But this is really a story that we've seen playing out in a lot of the industrial companies in South Africa at the moment. This is a recovery off a low base, and these businesses that have survived the pandemic are looking pretty strong.
Right, a final thought from you, Gary. We are having a family meeting this evening, and there's a lot of worry about the kind of restrictions that are going to be put in place by the president when he addresses us later on. Your thoughts on some of the pronouncements that may be made and the impact they might have? We saw alcohol bans having a dire impact on certain industries, the cigarette bans, we've just had a really tough time with these announcements in the past, and I'm just wondering what you think might happen and the kind of impact we might see.
So there's already been reports released that the advice from the National Coronavirus Command Council has been that they increase the lockdown to level 3. As you say, this is probably going to result in, certainly a decreased curfew, but probably a ban on alcohol sales again, in some form or the other, restrictions around that. It's difficult. I mean, it's quite clear from the increased numbers that we are heading back into, a more dangerous time. We don't want our hospitals to be overrun. And, obviously with the third wave coming, this is a time where it's easy to become complacent. So, of course, I think the government has learned that the South African economy just can't take the kind of lockdown we saw in the first wave. But we expect this third wave to follow really the patterns that we saw in the second wave. And yes, we're going to see some tightening of restrictions, but I don't think to a level that is going to stifle the economy that we saw in the first wave.